Hello, everyone, and welcome to our whirlwind tour of the stock market. Today, we're not cooking up any recipes, but we're certainly talking about a different kind of stock, the kind that can give you a taste of owning part of a big company. Ever fantasized about having a stake in one of those tech behemoths or automotive giants? Well, buckle up because we're diving into the world of stocks. So, what's the big deal with stocks, you ask? They're more than just pieces of paper or digital numbers on a screen. They're tickets to the business roller coaster. And believe me, it's almost as thrilling as any theme park ride. Owning stocks means you get to share in the profits of companies you believe in. And let's face it, it also gives you some pretty cool bragging rights. Now, investing in stocks comes with its ups and downs. Imagine riding a roller coaster, blindfolded, that's sometimes designed by a mad scientist. It's risky, unpredictable, but oh, so exciting. So stick around as we unpack the mysteries of the stock market, turning complex jargon into fun, easy-to-digest info bites that'll not only help you understand, but maybe even get you started on your investing journey. Who knows? By the end of this, you might just be ready to jump on board and ride the stock market waves like a pro. Let's get started and make finance fun. All right, so let's hop into our time machine and travel back to where it all began. No, not to the Big Bang, but close enough. The birth of the stock market. Picture this. It's the 1600s. The fashion was all about big wigs and bigger skirts. And here in the bustling streets of Amsterdam, the first ever stock market was getting off the ground. Yes, folks, the Dutch not only gave us tulips and windmills, but also the concept of buying shares in companies. How cool is that? Now let's fast forward a bit to the 17th century. Imagine you're a sea explorer, but instead of looking for new continents, you're investing in companies that send ships across the oceans. These were the first publicly traded companies, and boy, was it a game changer. People could invest in a voyage and get a piece of the treasure, or the tea, spices, and silk, assuming pirates didn't get there first. But wait, there's more. By the 1800s, the Industrial Revolution was in full swing, and with it came the need for big money to build railways, factories, and all that steam-powered goodness. Where did that money come from? You guessed it, stocks. This was when owning stocks became the in thing for the daring and dapper investor. Fast forward to today, and the stock market has transformed from handwritten stock certificates to digital blips on a screen. High-speed trading, global markets, electronic exchanges, it's like Wall Street meets Star Trek. And through all these changes, one thing remains constant: the thrill of the trade, the risks, the rewards, and yes, the occasional financial facepalms. So there you have it, a quick zip through stock market history, proving that while times may change, the excitement of investing remains the same. Who knew history could be this much fun, right? Now let's jump back to the present and see how all this history shapes our understanding of stocks today. Okay, team, strap on your geek goggles because we're about to get technical. But don't worry, I promise to keep it as light as a feather, or as close as we can get when talking about financial instruments. So, what exactly is a stock? No, it's not a new type of livestock. It's actually a share in the ownership of a company. That's right, owning a stock means you're part owner of a company. Feel like a mogul yet? Now, let's break it down. When a company wants to raise money, they can go public. This isn't like going on stage at karaoke night, but rather entering the stock market through what's called an initial public offering, or IPO. This is the financial equivalent of a debutante ball, where companies go, "Here I am, world. Buy a piece of me." And when you buy those pieces, those stocks, you're hoping they'll grow in value like a well-watered plant. There are a couple of types of stocks you might encounter. First, we have common stocks, which are like your standard ticket to the shareholder party. You get dividends and voting rights. Yes, you get to vote on big decisions like you're on some high-stakes corporate jury. Then there's preferred stock, which is like having a VIP pass. You might not get to vote, but you get dividends first and more regularly. It's like being first in line at a buffet, first dibs on the good stuff. But how do we know what a stock is worth? It's not just about pulling numbers out of a hat, though sometimes it might seem like it. Stock prices change based on supply and demand. How many people want to buy a stock versus how many want to sell it? It's like a popularity contest where the most liked, or rather, the most bought stocks see their prices go up. And then there's the mysterious world of market indices, like the S&P 500 or the Dow Jones. Think of them as the highlight reels of the stock market, showing us the top performers and giving us a snapshot of the market's overall health. So there you have it. Stocks, IPOs, common versus preferred, and the ever-dynamic market indices. All the ingredients for our financial stew. Who knew finance could taste this interesting, right? Now, let's move on and see how all this technical jargon plays out in the real world of dollar signs and investment strategies. All right, buckle up, folks, because we're about to see how stocks are not just fun and games. They're serious business with a major impact on the old wallet and, well, the entire economy. Imagine stocks as the gears in a giant economic machine. When they move, everything else whirls and twirls along with them. So here's the scoop. When you buy stocks, you're not just grabbing a piece of a company, you're pumping money into the economy. That's right. Every time you invest in stocks, you're like a mini economic stimulator. This money doesn't just sit there. It gets busy. Companies use your cash to innovate, expand, hire more people, basically throw a big party for economic growth. And the best part? If they do well, you do well. It's like being on a team where everyone wins when the game is played right. But wait, there's more. The stock market is like the economy's thermometer. When stock prices are high and everyone's buying, it's like the economy has a fever, running hot with activity. When prices drop and folks are selling off stocks like their last season's fashion, oof, that's a chill we feel, and it might mean the economy's catching a cold. And here's a fun fact. Even if you're not an investor, the stock market still affects you. How? Well, think about your job, the products you buy, even your local government. They're all influenced by the health of the stock market. High stock prices can mean more jobs, better wages, and even lower taxes. When the market's down, it might be tighter belts and budget cuts. Yep, the stock market's mood swings can pretty much change the vibe of the whole country. So there you have it. The stock market, an economic powerhouse that keeps the cash flowing, businesses growing, and all of us guessing what's next. It's like a financial soap opera where the drama never ends. Now let's keep this fun financial journey going and see how you can navigate this wild world of stocks. Welcome back, financial adventurers. Today, we're going to crack the code of market dynamics, or as I like to call it, the secret dance of the stock market. Ready to boogie? Let's hit the dance floor. First off, let's talk about what drives this wild ride of stock prices. You see, it's all about popularity, really. Kind of like high school, but with more money involved. If a lot of people want to buy a particular stock because the company's doing well, or they've invented the next big thing, like, say, a self-cleaning sneaker, the price goes up. Why? Because everyone's clamoring to get a piece of the action, and there's only so much to go around. It's the classic tale of supply and demand, folks. Now, if people start selling their shares faster than hotcakes at a county fair, the price drops. Maybe the company made a boo-boo, or there's some economic gloom on the horizon. Either way, when the crowd heads for the exits, the stock price takes a dive. But wait, there's more. We've got these big burly players called market indices, like the Dow Jones Industrial Average or the S&P 500. Think of them as the stock market's scorekeepers. They track how groups of stocks are doing and give us a snapshot of the market's overall health. It's like checking the leaderboard at a sports game. Except instead of sports teams, it's companies. And instead of points, it's stock prices. And let's not forget about the psychological thrill ride of investing. Market sentiment, how investors feel about the market's future, can sway stock prices as much as any hard financial data. If investors are feeling optimistic, prices might soar. If they're biting their nails, prices might tumble. It's like the stock market has its own mood swings. So there you have it. Market dynamics, a whirlwind of buying, selling, and emotional roller coasters. Just remember, while the market might seem like a mysterious beast, it's really just a big group of people making decisions. Some calm and calculated, others on a caffeine high. Next up, we'll explore how to navigate these choppy waters with some savvy investment strategies. Stay tuned. Buckle up as we navigate the exciting landscape of investment strategies, your very own financial playbook. Think of it as your guide to becoming a maestro in the orchestra of stocks. Ready to conduct some serious symphonies? Let's tune up. First off, there's the classic, long-term investing. This is for all you set it and forget it folks who view stocks like a fine wine that gets better with age. The idea here is simple. Pick solid companies, buy their stocks, and then be as patient as a cat outside a mouse hole. Over time, despite the market's ups and downs, these stocks can grow significantly, much like your favorite tree in the backyard, slowly but surely. But maybe you're more of a thrill seeker? Enter short-term investments. This strategy is all about making quick moves and swift profits, kind of like playing a game of financial tag. You're in, you're out, and hopefully you're up. It requires keeping an eagle eye on market trends and a good dose of nerve. Not for the faint-hearted, my friends, but certainly a way to add some excitement to your portfolio. Now, let's not forget about diversification. Ever heard the saying, don't put all your eggs in one basket? In the stock world, this means spreading your investments across various sectors. Technology, healthcare, energy, you name it. It's like hosting a dinner party with different kinds of dishes. If one dish flops, the others might still get rave reviews. This strategy helps manage risk and keeps your investment health in check. And speaking of health, let's talk risk management. This is like your financial immune system, protecting you from potential downturns. Use tools like stop-loss orders, which are like saying, if my stock drops to this price, sell it before it crashes my party. It's a way to put safety nets under your high-wire financial act. So there you have it, folks. From long-term growth to quick flips, and from spreading your risks to setting up safety nets, these strategies are your toolkit for navigating the thrilling world of stocks. Choose your tools wisely, blend them to fit your personal financial style, and most importantly, enjoy the journey. Who said finance couldn't be fun? Welcome back to the future, my financial friends. Or should I say, welcome to the trading floor of tomorrow, which, by the way, fits right in your pocket. Yes, you heard that right. Today we're exploring the high-tech toys and terrific tools that make stock trading a breeze, or at least less of a headache. So grab your gadgets and let's get techie. First up, we have trading platforms. Gone are the days of shouting buy and sell orders on a chaotic exchange floor. Now, sophisticated trading platforms allow you to trade stocks with just a few clicks or taps. It's like having a financial command center on your laptop or smartphone. Whether you're in your pajamas at home or sipping a latte at a cafe, you can be making moves in the market like a Wall Street pro. And then there's the magic of apps. Not just any apps, but smart, sleek apps designed to keep you ahead in the game. These apps not only let you trade, but they also provide real-time data, analysis, and news. It's like having a financial advisor in your pocket, minus the hourly fees. Want to know how your stocks are doing? There's an app for that. Curious about the latest market news? Yep, there's an app for that too. Let's not forget about algorithms. These are not your average abracadabra spells. These are complex mathematical models that help predict stock movements and make automated trades. It's like having a crystal ball, but one that runs on code. Algorithms can process millions of data points in the blink of an eye, making decisions faster than a human ever could. They're the unsung heroes or villains, depending on who you ask, in the financial markets today. And of course, there's artificial intelligence, AI. AI is changing the game by analyzing vast amounts of information to offer predictions and insights that are out of this world. It's like having a super smart sidekick that's always on the lookout for the next big opportunity or potential pitfall. So there you have it, the dazzling array of tools and technology at your fingertips, turning the stock market into a playground for tech enthusiasts. With these modern marvels, you're not just investing, you're taking part in a technological revolution. Who knew finance could get this futuristic? Now, armed with these tools, let's march confidently into the future of trading. Remember, with great power comes great responsibility, especially when that power comes with a user manual. And just like that, my financial fellows, we've zipped through the ins and outs of the stock market, from its old-timey origins to the tech-tastic tools of today. But what's next on this wild ride? Well, let's gaze into our financial future with a mix of educated guesses and wishful thinking. The future of the stock market looks as bright as a screen on max brightness. Maybe too bright sometimes. We're talking more automation, more AI, and even more algorithms. Picture robots doing the trading while humans kick back with a cup of coffee, watching the money roll in. Or at least that's the dream. The reality? We'll probably still need to keep an eye on those robots. They're smart, but let's face it, they can't appreciate a good meme like we can. We're also looking at a more connected world. Global markets are becoming the norm, not the exception. This means more opportunities, but also more complexity. It's like the whole world is a giant stock market party, and everyone's invited. So dust off your global market dance shoes and get ready to salsa with stocks from Shanghai to New York. And let's not forget about sustainability. As more investors become aware of their environmental and social impact, we're seeing a rise in green investing. It's like the stock market is going on a health kick, opting for green smoothies and ethical investments over quick bucks. This could mean big things for companies that put the planet and people first. So as we look forward to these exciting developments, remember, the stock market is a beast that's always evolving. It can be your best friend or your trickiest puzzle, but with the right tools and a bit of savvy, it's a puzzle you can definitely solve. Thank you for joining me on this financial odyssey. Keep learning, keep laughing, and remember, investing isn't just about making money. It's about making smart, informed decisions that help you reach your goals. Until next time, keep your investments high and your stress low. Happy trading, everyone. And before you go, a quick but important note. While we've had a blast exploring the stock market and sharing tips and insights, please remember this video is for educational and entertainment purposes only. None of the content should be taken as specific financial or investment advice. Every investment involves risk, and it's crucial to do your own research or consult with a professional advisor before making any investment decisions. So, use this video as a launching pad for your learning journey, not as a map to the treasure. Think of it as your financial homework, not your financial playbook. Stay curious, stay cautious, and always keep learning. Because in the world of stocks, knowledge truly is power.